Hello girls, so in this video we are going to see about the treatment of provision for bad debts. Under final accounts there are various adjusting journal entries, so under which one of the important adjustment is provision for bad debts. Before I go on to the format, how it is like presented in profit and loss account and how it is presented in the balance sheet, let me just explain you the basic concept. Generally under final accounts you will be given a trial balance with few adjustments. So there may be cases wherein you'll be given a bad debt in the trial balance as well as a bad debt in the adjustments also. Similarly, you'll be given a provision for bad debt in your trial balance and provision for bad debts in your adjustments. Always remember, the bad debts and provision for bad debts that is given in your trial balance is called as old bad debt or old provision for bad debt. Okay, and it appears only once. It appears only in your P&L account. Okay, and any adjustments or any adjusting entries would appear in two places. With regard to bad debts and provision for bad debts, the new ones would appear in two places in your final account. One, you will show that in your P&L account, and the other you will show the same in the balance sheet. So adjustments always come twice in your final accounts, wherein your items in your trial balance will be shown only once. Okay, understood till this? So let me just once again come up with this point. So the items that is shown in the trial balance would appear only once in your final accounts. So the bad debt that is shown in trial balance and provision for bad debt that is shown in your trial balance, it is called old ones, old bad debt and old provision. It would appear only once in your P&L account, wherein the bad debts and the provision for bad debts that is shown in your adjustment, it is called as new bad debts and new provision for bad debts, and it appears twice in your final accounts. One, it would be shown in the P&L account debit side, and two, it would be shown on the asset side balance sheet. Understood till this? Okay, let me just move on to the format. So how it is done? So the format is this. As I told you, the item that appears in your trial balance, it is called as old bad debt and old provision for bad debt. Understood? Okay, so item that appears in trial balance is old bad debt and old provision for bad debt. Yeah, and the items that appear in my adjustments is called as new. So I call it new bad debt and new provision for bad debt. It is in profit and loss account. The new bad debt and new provision for bad debt is added. You could see new bad debt and new provision for bad debts will be added to my old bad debt. Okay, so in P&L account what happens? I write old bad debt, add new bad debts, add provision for bad debts which is new given in the adjusting entry, and one more provision for bad debt if it is like given in your trial balance, it is called old, so it has to be subtracted. So this is the format or this is the treatment of provision for bad debts. So I have given you once again over here. I just tell you something which is given in adjustment is called as new, and any new bad debt and new provision for bad debt have to be added in your P&L account. In trial balance, if you are given bad debt and provision for bad debt, then it is called as old ones. Okay, so in old ones it would appear only once and it would appear only in your P&L account, and make sure your old provision for bad debt is subtracted. So that is what it is done, right? I start my profit and loss account with the old bad debt. I will add the new ones. Okay, new ones in sense the bad debts and provision for bad debts given in my adjustment. I will add those two items and I will subtract the old provision for bad debts. What is called as old provision for bad debt? If the provision for bad debt is given in my trial balance, I call it old. I will have to subtract it in my profit and loss account. So the net amount have to be entered in my P&L account. Got it? So moving on to the balance sheet. What is the treatment? As I already told you, the items that appear in trial balance appears only once. So my old bad debt and old provision for bad debt has always been, it's already been considered in my P&L account. So it would not appear twice. So it will not appear in my balance sheet. In my balance sheet, I will just have my new ones. So in my balance sheet, what I do, I show sundry debtors from which I will deduct the new bad debt, and I will have a net amount, and from the net amount I will have to deduct the provision for bad debts. I will arrive at the net amount for sundry debtors. So this is the treatment of provision for bad debts. Understood till that? So summarizing, I will have to understand bad debt and provision for bad debt, which is given in the trial balance, can be called as old ones, and such bad debt and provision for bad debt that is given in my adjustment is called new ones. New ones appear twice in your final account. It would appear both in your P&L account and balance sheet. Old ones, it would appear only once, which is in my P&L account. So how do I do? In P&L account, I will have to add the new ones, and in balance sheet, I will have to subtract the new ones. Old bad debt and old provision for bad debt, it is like this. It would appear only once in my final account, which means it would appear only in my profit and loss account. So I start my answer with two bad debts, the old ones that is given in the trial balance, and I will have to subtract the provision for bad debt. So this is how provision for bad debt is treated. So let me just give you a problem. This problem would give you an idea as to how do I present it in my P&L account. Okay. So as I will use both the sides of my notebook. I will have this format. So this is my format for P&L account. Yeah. And see, in this problem they have given me 4 items. First one, they have given me provision for bad debts. Okay. And I have been given bad debts. I've given debtors, and I have given make provision for bad debts 5%. So this January 2001 provision for bad debts, I just call it an old one. Okay. And make provision for bad debts, which means it has still yet not been made. Okay. This one is old because it's like existing. This one I call it new because I need to make a new provision. So this one would be my new provision for bad debts. Okay. And I have, as on December 31st, I have a bad debt of 1,870. So every year at the end of the year you will prepare trial balance, which means I consider this as my trial balance bad debt, which means it's old. So only if it is given in trial balance, it is old bad debt. If it is like given in the adjustment, it's new bad debt. That we all know. Debtors would not appear in my P&L account. It would only appear in my balance sheet. So I'm just gonna ignore this. We will just use it for calculation for this problem. So okay, now how do I go about it? So in P&L account, what is the format? 2 bad debts old, which means I have a bad debt of 1,870. Okay, so I consider this as my trial balance bad debt, which is an old one. So I start my answer with 1,780, the old bad debt. Okay, so have they given us the new bad debt? There is no bad debt given in the adjustment, so we don't have this item in this problem. Okay, and do we have a old provision for bad debt and new provision for bad debt? Yes, we have been given the 2 bad debts. Yes, so for the old provision for bad debt, we have the amount directly, so it's like very simple. I'm just gonna consider the amount that is given in the problem, which is 2,500. So the thing is, I will have to find out my new provision for bad debt, which is given in the adjustment. So how is this done? It's 5% on debtors. Okay, so I have a sundry debtors given, which is sum 20,000, and they say the new provision for bad debts is nothing but 5%. Okay, so it's 5% on this 20,000. which gives me how much? 1000. Okay, so now what I gonna do? I'm just gonna have this 1000. So now I add my bad debt, add new provision for bad debt. I just get 2870. I'm gonna minus or subtract my old provision, which is 2500, and I will get the final answer 370. So this is what is shown in my profit and loss account. Got it, girls? So let me just once again explain you the concept. So the item, the bad debt or provision for bad debt, whatever may be the item, if it is like given in trial balance, it means it's existing. So we call it old. So the old items have to be subtracted. So those items which are given in adjustments have to be added. So this is what it is. So the new bad debt and new provision for bad debt will be added in my P&L account and would be subtracted in my balance sheet from sundry debtors. However, the old items would appear only once. I will start my answer with the old bad debt. However, I will subtract the old provision for bad debt. So this is the format to be done. Let me just give you an idea. One more question. So we will have to calculate provision for bad debts to be debited to P&L account. So it's a very similar question. So let me just try working out the same, similar type of problem. So I have this format, so which means I will have to use both the sides of my notebook. So this side it's like debit and the other side it's like credit. So in this problem, opening provision for bad debts. So opening provision for bad debts, it's like existing, so I call it old one. Sundry debtors, it would appear in my balance sheet. So old one, it would appear only in my P&L account. Okay, and bad debts yet to be written off. When they say yet to be written off, it's not old, it's new. Okay, it's not existing. We will have to still haven't written off, so we need to written off, which means it's new bad debt. Okay, it has something to do with the understanding of the terms. In the previous problem, if you could see, they just gave me bad debt and it was at the end of the year. So which means they would have prepared the trial balance and they have given me just the bad debt, so I consider it as old one. But in this problem, you could see bad debt yet to be written off, which means it has not yet been deducted from your sundry debtors. That is what it means. It's like an adjustment. So that's the reason I call it a new one. And provision for doubtful debts to be created 10% on debtors. I already had a old one, so this provision would be my new one. So both new provision for debtors, provision for bad debts and provision for doubtful debts, it would appear, okay, both in my P&L and balance sheet. And in this problem, they didn't ask you how it would be treated in balance sheet and all. They're just asking you what do you do in the P&L. So in the P&L, I will add this bad debt, and in the P&L, I will add this new provision for bad debts. Okay, so let me just start working out. So do we have a old bad debt in this problem? No, I just have a new bad debt in this problem. Okay, so what is the bad debt amount? It's 2000. So I start my answer with 2000. Okay, so do I have a new provision for bad debts? Yes, I do have. So how do I calculate? It's 10% on my debtors. So my working note is this way. I have my debtors, which is 42,000, and I have a new bad debt. Yes, I have a new bad debt. So I will have to deduct the new bad debt to get my net debtors amount, which is 2000. So now my net debtors is 40,000, from wherein I will deduct provision for bad debts, which is new. Okay, from which I can calculate the provision for bad debts, which is 10% on 40,000. So what's 10% on 40,000? It will be some 4,000. So yes, to calculate only this amount we have done all these calculations. So my new provision for bad debt is 4,000. So I get something called as 6,000. Now I have my old provision, which is 2,400. So yes, we have given effect to everything. So my answer is 3,600. So this is the amount which is shown, which will be shown in my profit and loss account. So got it? So this is how it is. So new bad debt and new provision for bad debt, in the balance sheet it would be deducted, but in P&L account it would be added. Okay, so hope you have had a better understanding. Yes, thank you girls.